we have here? All right, hold on, come on. Mirror that, and that, and that. There we go. And start streaming display. Almost ready. Almost heaven, West Virginia. Good go. Okay, stop recording, streaming, good to go. Live, live. And pressure, what's happening? Alrighty, nobody there yet. We're there. We're there. Wait a second. Oh, I gotta move that over a little bit. Gonna move it over just a smidge. Right there is perfect. Bloody jolly good. Got my glasses, got my drinks. We are ready to roll. Tony. Kowtar? What does that mean? Barbie girls. Harry, Roddy, what's happening? All right, let's get this ball rolling. XX2XX, Tennis Pro, what's happening? All right, let's get the ball rolling. Here we go. All righty. Margaret, good evening. Carlos, good evening. Tennis Pro, good evening. Mizor, good evening. Who do we have here? 19 Regal 3. Okay, if you say so. All right, wait a second. What are we doing here? All right. All right, what's this? Right, no, right there. Okay, that works. Ooh, this one. I'm gonna have to reset these. The Wise, ST, what's happening? You're back. Could be in Club Med Tom. What are you doing over there, dude? Uh-oh. GE Aerospace. Boogeyman, you actually got to give me the ticker symbol for GE Aerospace. Never heard of it. Sorry. Momo, what's happening? Danny, good evening. Jack Macy, what's happening? David, good morning. Oh, okay. GE. Isn't GE General Electric? Let's check it out. Why not? General Electric. Let's go. GE, first one on the list today. General Electric. Oh, GE Aerospace. Cool beans. All right, so what's happening here? That's interesting. Get the high, the low. Where was it? Where is it? Look at this. Up, down, up, down, up, down. What's going on? Oh, let's get out of there. You don't want to see that. Well, maybe you do, but you don't get to see that. Uh-oh. I'm in the wrong one. Don't want that one. I want this one. You fuck dog. All right, this one right there and right there, and get rid of that. And I think that's about it. Yep. Alrighty, so GE, here we go. GE, try it one more time. There we go. And we got to move it over just a tad. Just a tad. All right, GE. There we go. All righty, ready to roll. Jim, what's happening? Danny, what's going on? Kate, good evening. Carlos, how are you? All right, so with the high, the low, all that kind of nice neat stuff. 247.81. Okay. Got to change something here for a second. Grandpa, when are we going hiking? Anytime you think you can keep up with me, be my guest. Uh-oh, I got a little bit of an issue. Okay, there we go. Is that better? All right, a little bit more. Okay, not so much. Right there. That good? Yeah, that's good. All righty. Okay, so How are you? I'm fine, Leber. Okay, well, good morning, good morning, good morning. Kenny, good evening. How are you? Jeepers Creepers called. What he wants to is okay. Yeah, whatever. Anyone told you you are okay? Thank you. How many? Okay, all right. What's up? Cool beans. Alrighty. All right, Elliot. Do you think getting dragged into okay will cause even more market instability? I'm kind of hoping not bad. All right, Mr. Lou, good evening. How is your ROI 1% a week safe? Interesting question there, James. Let me ask you a question, James. Okay, now we checked yesterday. There's 10,136 different companies available. The only companies me personally, like have 50 years, 5 decades, 50 years or more of historical performance. Also, they have increased their dividends to their shareholders for at least 2 decades. Okay, what's a 41 plus B12? All right, don't even do that. Let's hear an ad read some promotions. All right, Silver Eagle ain't doing that. Bull Run will the cuts. Okay, buy all the dips, laugh at the seller. Okay, fine. Fine, fine, fine. Okay, James, as I was saying, the companies I look at have historical performance. They have seen 10, 20, 30 years of crap thrown at us by the, what do you call that? The economy, the US economy. So all that crap you've seen over the last 10, 20 years, well, these companies have actually been profitable through all that. Should we slow down investing for a bit or continue? Elliot, I cannot answer that question for you. I know absolutely nothing about you. But I do believe in the US economy. I continuously invest because the companies I buy. Please look up Tractor Supply. Okay, hold on a second. In the stock. Fundamentals are meaningless, just buy. Okay, you do what you think is right for you. My guess is less than 50. No idea what that means. Okay, so Elliot, like I said, I don't know anything about you. I cannot give you advice. It would be not a wise thing for me to do. How's that? Okay, it would be a disservice. That's what I was looking for. Okay, so let's take a look at GE. Somebody want to take a look. Here we go. Currently at 247.81, so the 250s are going for 340, and that's more than 1%. So let me just briefly explain to you what I'm doing here, and hopefully we're all on the same track. Because, I don't want you guys wasting your time, all right? But getting that 1% a week, that has got to be done leveraging our something. James, you're relatively new here. Only reason I know that because my name is James, but I don't spell mine with a Y, so I really remember you being here. Okay? Now, you may have watched in the past, but this is the first time you're actually participating in the conversation. So sit back, chill, see if it makes sense. But remember, what I'm looking for specifically is a simple, safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. And those are companies that are consistently profitable, even through all the crap we've been through for the last 10, 15, 20 years. Love the banner. All righty, all righty. So, that being said, James, never, ever, ever buy something you don't want to hold on to long term. If you don't understand the stock, don't buy it. If you don't understand the risks involved, don't buy it. Everything has risks. You have risk staying in bed. You have risk getting out of bed. You have a risk walking out the door into the front yard. You got a risk staying in the house. Risk is everywhere. But here, we try to mitigate the risk. We try to make sure that everything is as safe as possible. So if you're only investing in good quality companies that have been around for 50 to 100 years and are consistently profitable, there is a risk, yeah. But ask yourself this question. Do you think, seriously, do you think that Coca-Cola or Pepsi, General Motors, or Ford could go bankrupt and disappear within the next couple of weeks? Well, I don't either. But usually, when a company is a little bit on the iffy side, the very first thing to go are the dividends. Great, well, because the profits have a tendency to dry up. Okay, well, that is something we look at on a consistent basis. So are they continuously profitable? If yes, great. Hi, I love the banner. Okay, cool. All right. I have a question. Please ask the question once. Christina, how are you? Inappropriate question here, Miss Christina, but thank you. So now, okay, that transcend, what does SONA mean? Uh-oh. Is Microsoft a good stock for you? Would try, yeah, Mr. Nice Guy. Love Microsoft. Hold on. I'm going to pause the questions for a little bit. I do try to answer each and every question. However, we're getting to a point where there are so many questions and so many people asking, I can't get to all of them. Even though I try to get to every single question, I do. Do I get to say the N word if I'm white? You mean like November, nincompoop, numbskull, knucklehead? You mean those questions? Waiting for activation. This may take some time. Okay, dismiss. There we go. I don't know what that meant. M. Woodhouse. Hey, James. Is the YouTube stream up? I could not find it tonight on your page. Uh-oh, it should be. Microsoft is only 49 years old. Yeah, I'm well aware of that, Mike. But I'm looking for companies that have consistently increased their profits for at least 2 decades. Now, that's 20 years, right? All right, so that being said, let's keep on going. As far as I know, ZD, how are you doing today? Nice to see you. Let's keep on going. Jo, how you doing? Okay, so General Electric, let's take it a look. All right, number one. I need the glasses for this. A year ago, Microsoft was right around 161. Now, wait a minute, we're on General Electric. Hold on. General Electric, 161.32 about a year ago. We bottomed out at the beginning of August at 149.92. Well, the last 90 days, look at this. The high, the low, where was it? Look at the motion. Up, down, up, down. Now she's definitely going up, and we have 2 days to the upside. Well, I like this right here. We're going to zoom in a little bit closer to see if it makes sense. Hold on. Let's chill out with the questions for a bit. All right, last 30 days would be the 23rd. The 23rd. Right there. Here we go. Is that about right? 22nd. 23rd. Here we go. 30 days ago today, here's our 30-day bottom. 30 days ago. Okay, 2 weeks later, there's the top. Now, what usually happens? Usually, you can take a look at almost any stock and you'll see a pattern over and over and over again. You got a 30-day bottom, 30-day top. Stock has a tendency to drop, which is usually called profit taking, retracement, correction, whatever you want to call it. Okay, but if she's at 227, jumps up to 257, that's a $30 increase. Well, you got a lot of people taking profits, and yeah, stock drops. Well, now you got 2 days to the upside. Well, I like 2 days to the upside, and on the third day, which would be tomorrow, if she's right around here, the same area, and going up, that's where I will jump in. Because I don't like to jump in at the high. I wait for the profits to take place, then I look to jump in, which is right there. We got some noise over here on Zoom. What's going on over there? Who is that? Oh, iPad 8. I forget who that is. All right. So, everything looks good. However, let's take a look at what's called the seasonality chart if you're familiar with that. Now, a seasonality chart, basically, let's take a gander. Come on. Right there. If you're not familiar with the seasonality chart, all the way to the left is January 1st. All the way to the right is December 31st. It gives you one whole year at a time, from January to December. Now, the blue line represents the movement this year, 2025. This red line here, well, that is 10 years of average movement. Okay, what does the stock normally do this time of year? Well, we're right here where this blue dot is. That's today. Okay, so this area right here between June and July, this is the area I want to look in. So let's zoom in and see, what does this stock normally do this time of year? Well, as you can plainly see, this baby's flat as a pancake. No big moves to the upside, no big moves to the downside. Well, great. So let's do a covered call on this one, because if you've been here before, you know I like safe trades. I like simple, safe, predictable, consistent, and then no way for me to lose. That's what I like. Now, the reason I say no way for me to lose, because I look at companies that have been around and have a proven track record that are relatively strong, and it's a very low probability of them disappearing. But you never know, because it is what it is. Okay, just sit tight. Sit tight. We're going to get to those questions. Mr. Nice Guy, I will take a look at Tractor Supply. Give me a couple of minutes. All right, so $249.90. That's the current price, $249.90. All right, so the closest strike price. So if I buy it at $249.90 and I sell it to someone else at $250, well, I'm going to collect this right here, $3.40 a share. Well, that's more than 1%, and I'm looking for a 1% every single week. Why not? Think about it. Okay? If there's a way to get a simple, safe, consistent, predictable 1% a week, why not do it? It's not that difficult. Now, for those of you that are new here, that haven't been here before, the trading strategy I'm showing tonight, and I will give examples. It is recorded, so you can watch it over and over again. If you have any questions, just ask. Now, the companies I look at have consistent profitability. They have 2 decades of profits, which means they have been around long enough to have 2 decades of profits. Okay, and the profits increase every single day. Every single year. All right, so let's do a covered call on General Electric to see what it looks like. Now, first thing I want to do is change it to the strategy called covered call, and I want to do the 250s, which is right there. All right, just one contract so you guys understand how the numbers work. At the market to open, here we go. And this is what the order looks like and sounds like. And I'll explain it as we progress. You ready? Like a good movie, here's a good saying. Like a good movie, everything comes together at the end. Okay, so everything will make sense. Just sit back, relax, ask questions, take notes if you need to. Okay, here's the order right here. Buy one covered call, General Electric, 100, which is a weekly, 27 June 25. That means this option is going to expire this coming Friday. So whoever buys it from me has 4 days to do something, if they so desire. The $250 call option against the stock at the market to open. And no, I did not stutter, and no, I did not repeat myself. To open mean there are 2 trades. 1, I'm buying the stock. 2, I am selling a covered call, which is a call option, giving somebody the right, not the obligation, to buy it from me at a certain price, $250, by a certain date. This Friday, 4 days. For that privilege, they are going to pay me $576.50 per contract. So each contract I buy is $576. So here's an idea. Let's take a look at it on a different wave, a different perspective. Okay, think of it this way. I'm not used to talking so much, and it bothers my voice box, my larynx. What do you call that thing? Vocal cords, all that stuff right down here. So the ginger tea with honey makes everything better. So one contract, $576. That's the profit. Take a look at all, because everything you need to know is right there. Okay, this is the order. This is my break even, 244. This is my maximum profit, 576. This is the cost of the trade, including commissions and fees, 24,424. That's just for 100 shares of General Electric. Now, think of it this way. Think of it as a cash-producing asset, okay? It's an asset that you have the ability to take cash flow from on a weekly basis. So here's the thing. If I buy this asset at $24,000, okay, it gives me $576 a month. Oh, sorry, a week. It's only Monday. Why? Oh, yeah. Is it Monday or is it Tuesday? It's Monday, isn't it? Yeah, it's Monday. So why am I tired already? Anyway, besides the point. So in order to find out what my rate of return is going to be, we're going to need the calculator. So let's get the calculator on out here. Where am I looking at? Get rid of that. Calculator. Here we go. Calculator. Drag it on over to there. Uh-oh. All right. So maximum profit is $576. All right. Now, to find out the rate of return, you divide that by the investment. And the investment is 24,424. Okay. 24,424 gives me a grand total of 2.3%. Well, think about that for a second. Now, this is General Electric. Company's been around for over 100 years. Okay. Hi, James. Is YouTube upstream? Yeah, baby. In the house. What's going on? Think about it. General Electric's been around for over 100 years. The opportunity here, buy a cash producing asset, one contract, 24 grand. Well, it's giving me 2.3% for 1 week. Well, here's the thing. Let's get rid of this. Let's go right to there. Let's get it out of there. Let's go right to here. All right. Now, here's a calendar. Okay, so if I buy this tomorrow, which is the 24th, right? I sell somebody the rights to buy it from me at almost the exact same price I just paid for it. And I'm getting 2.4%, whatever that was, for just this week. Now, hypothetically speaking, if it's in the money on Friday, which is, gonna need the glasses for this one. I forget what the hell it was. If it's in the money by Friday, more than likely, they will buy that stock from me and I will get all my $24,000 back. Plus, I get to keep that $340. Okay, that's my profit. But however, if it is not in the money come Friday, all right, I will get to do a covered call again on the 30th and do it all again. See, sell a covered call. So I pick up 200, what was it? Short freaking memory. Short freaking memory. There it goes, right there. Nope. Back to here. Calculator's what I need. There we go. $576 for this week. Okay? That's 2.3%. Now, if it is in the money on Friday, I will get all my money back the following Monday. If not, I get to sell another covered call on the week of the 30th. And then I can get a cash flow every single week close to, $300, $400, $500, $700, whatever. But it's going to change every week. It's not going to be the exact same every week. So this week, with the numbers that we're looking at this moment in time, it's 2.3%. Now, if 1% per week is over 50% per year, well, what do you think 2.3% a week is? Well, it's over 100%. Think about it. 2% a week is over 100% a year. Can you imagine doubling your money every single year? Now, I don't get 2% every week. I average about 1.4. Some weeks I miss 1%. Some weeks I get 3 or 4%. But it averages out to 1.4 for me. But I've been doing this for 20 years. And that's why I'm here. I'm here to give you this information. I'm not selling anything. Now, yeah, I do have stuff to sell, but I'm not promoting anything and I'm not trying to sell you anything. If you want to buy something, you know how to do it. Go to the bio, use all that kind of stuff, but you will not hear me saying a pitch by the end of the day. I'm just here to learn. No, wait a minute. I'm here to teach so you guys can learn. All right. So, tomorrow's the 24th. So if I do that trade tomorrow, I get 2.3%. Friday, I either get all my money back or I do it again on Monday. On Friday, I either get all my money back or I do it again the following Monday. I do it every single week. Remember I said simple, safe, predictable, and consistent. Now, a covered call, I know pretty much exactly what I'm going to make before I do it. That's one of the reasons why I love the covered call. All right? Now, let's go on. I'm going to write General Electric down because 2.3% is not bad at all. 2.3. And what one was that? I don't know. I just don't know. The 250. All right, 250. All right. So the 250 actually looked pretty darn good. All right, what do we have? What we have here? Scotty Cook, what's happening? All right, let's keep on going. We're going to take a look at Microsoft in a little bit. Zantran-san, we're going to take a look at Sonar in a little bit. What do we have over here on YouTube? YouTube. Fundamentals is non-negotiable. All right, thank you. Blind Justice, cool beans. J.O., what's happening? Jason, what's going on? Frank O'Neill, good evening, good evening. Great strategy, I like you. I like that idea. Okay, thoughts on hymns, not 20 years old, sorry. OPE to open, I have no idea what that means. Weekly expiration, Blind Justice. Yep, hey James, how about inversed positions on equity oil futures? It sounds interesting, but here's the thing, okay? I personally, for me, okay, let's stop here for a second. All right, I got a question over here on the other tick. Okay, I personally am perfectly okay with what I am doing. Now, if that works for you, wonderful, awesome, okay? But I come from a time frame, in the 60s and 70s, where if something works, we leave it alone and we just keep using it until it doesn't work anymore. Well, why would I want to look at something else? I am perfectly okay with what I'm doing. I have no desire to look at anything else. Because simple, safe, predictable, consistent, 1% a week works for me less than 10 minutes a day. That's the idea of it. All right, I gotta hold this one right there. You guys keep asking all these questions. Hold that thought. Will you close at 1%? Blind Justice, no, I will not. I will take a look at it. And as the days go by, if I do this particular trade first thing tomorrow morning, well, Wednesday morning, I will look at it again. Thursday morning, I will look at it again. And it's always, always, always going to be a numbers game. What did I buy it at? What strike price did I sell? What's it at now? What are my choices? So, two, consistency of profitability and protection of my, nest egg. Okay, so preservation of my capital, protecting my nest egg, and cash flow. That's what I'm looking for. Now, the trading strategy is boring as hell. Okay, it is slow. It is mind-numbingly stagnant, for lack of better words. It's the same thing, week after week after week. If you go to my YouTube channel, the10MinuteTrader.com, you can take a look. I have over 1,000 videos, and all basically saying the exact same thing. Simple, safe, predictable, consistent, 1% per week. Well, if it works, why do I want to mess with it? It just doesn't make any sense. I had a question over here. All right. Yes. Hey, boss, what's a typical exit strategy for you? Do you sell at limit or you sell covered calls at the money? Exactly. It's always going to be about the numbers. What are the numbers telling me? What did I buy it for? What strike price did I sell? Okay, where's it at now? What choices do I have for consistent profitability and preservation of capital? Okay, I'm 61 years old. No desire, listen closely, no desire whatsoever to go back to punching a time clock. Okay, none. Now, I owned my own business for quite a while. I sold that, and then I just started working for other people because it was easier, because working for yourself ain't all cracked up to be. Okay, you put in a lot of hours. Yeah, you make a whole bunch of money, but you're trading your time for money. And at some point in your life, you're going to think to yourself, well, what is my time actually really worth? Well, I'm retired now, so all the money I made, now I've been working since 1973, so all the money I have accumulated since then now has to last me for the rest of my life. So I don't have the luxury of being wrong. So some of you that aren't retired yet, 10, 15, 20 years to go before you reach retirement. Now remember, for retirement, you got 3 options. Okay? 3 options. You ready? Here we go. Number 1, you can age out, which means you go to work one day and your boss says, whoa, hold on, brother. Go home. You're a little too old for coming into work. Age out means you're too old to work. We all get there and don't think you're anyone special. Okay? Age out. That's number 1. Number 2, you can walk out. Basically, people who walk out, they've earned enough money over their lifetimes and they have a residual income coming in from that. We all have a number. What do you need on a monthly basis in order to be able to walk out of work and say, hey, I'm done? A lot of people do it. And number 3, you can toe tag out. Some of you know exactly what toe tag means. Yeah, you die on your way to work, you die on your way home from work, or you die at work. 3 opportunities. That's it. Okay? So let's keep on keeping on. So General Electric, I like it if I get one more day to the upside. Because we got 2 days here. Here's your bottom here. 1 day, 2 day. I love 2 days to the upside, but on the 3rd day is where I personally would jump in. That's me. You guys got to figure out what works for you. How do you decide where the bottom is? Because you make money in the stock market buying low, selling high. And no matter what anyone thinks, no matter what anyone says, if anyone tells you stocks do more than 2 things, 2, that's it. 2, that's it. They go up, they go down. They go up, they go down. And it goes up, it goes down, up, 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 down. That's it. Go up, go down. That's all it does. It does not come to your house, take the dog for a walk. They do not come to your house and wash the dishes, mow the lawn, fold the laundry, make the bed. No, stocks go up, stocks go down. Stocks go up, stocks go down. That's it. So the idea, find a good company. As a matter of fact, find a whole bunch of good companies and just rotate them. As it goes up, okay, when it gets to the top, you sell. As it comes down, okay, and it turns. See, here's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 times in 1 year. This stock went up, found a bottom, turned around, went back up again. Found a top, turned around, went down. Found a bottom, turned around, went up. That's all it does, up, down. So if you find a good company, just watch it. Buy it at the right time. Sell it when it's time to sell. Now you have to decide when to sell because you have two things. Number 1, it is not a profit until you take it. Simple. If the stock goes up and you do not take that profit and the stock comes back down and you lose that profit, that's your own damn fault. Ain't profit till you take it, and nobody went broke taking profits. At least nobody I know ever went broke taking profits. Who do we have here? Dennis Mancini. Howdy, Haiti, Heidi, Hody. All that kind of nice, fun stuff. So, General Electric, I wrote it down. It looks kind of interesting. All right, Zantran wants to take a look at Sona. Never heard of it. Okay. S-O-N-A. S-O-N-A. Okay, see, when it pops up like this, saying Sona has no options, it's an automatic no. Okay, why even bother? Zantran, FXI. FXI. I gotta get rid of that. Change this back to single. Move this over. Okay. Definitely interesting. FXI. I have no idea what the heck this is. Oh, it's a large cap ETF. It's most likely going to be a no, dude, but let's take a look. Now I'm going to go over to Yahoo Finance. FXI. And I want to see how consistently profitable this is. Now, I tell everybody, if you're going to invest, okay, you need to find a financial website for you to get detailed information. iShares China large cap stocks, historical data. Well, I want to see how consistently has this thing shared its profits. Well, let's find out. Okay. Dividends only. Okay. Okay, dividends only, and then look at the date. I want to go back as far as possible, and I want to see every single dividend this company has paid out. 2004 until 2025. Well, that's more than 20 years. What? Wait. Hold on. 2005, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Okay, they're all there. All right, so let's take a look at the numbers. Have they increased every single year? Well, let's find out. 2005, 41. Then I went to 43, 69, 56. Hold on. That's going backwards. That's once. 20. That's going backwards too. 32, 22. There's 3 times. 45, 16. That's 4. No. Sorry, dude. No, hell no. 4 times, and we didn't even get 5 years or 10 years. No. Okay, sorry. They're not consistently profitable. When I say consistently profitable, every single one of these numbers should go low, higher, so on and so forth for 20 years. For me. Okay, you guys are different. You have to choose what companies you want to invest in. I'm 61. I don't have the luxury of being wrong. So I do not put my own money into companies that don't have 20 years of profitability. All right, let's keep on going. How much is the fee to buy Korea? I have no idea what that means. Trader from India, what are we discussing? We're discussing movie clips. We're discussing investing in dividend stocks for a consistent, safe, predictable 1% per week. Mooching with Mini Moo. You using your phone selfie camera. Yep, why not? Everything is backwards. Yep. I have no idea what the financial things mean. I just buy and sell. That's a horrible approach. But what do I know? Okay, Scotty, if you buy a stock and sell a covered call on Monday and then say Thursday the price goes down to your break even price, do you recommend to buy back the option and sell the stock to prevent drawdown? No. Scotty, you've been here long enough. You know there's 5 rules. Rule number 1 is never buy something you don't want to hold on to for the rest of your life. That's rule number 1. Rule number 2, never sell at a loss. Now, for those of you who do not know, the trading strategy I'm showing you was created for my 9-year-old daughter. Okay, back in 2008, she climbed on my lap and said, Daddy, what are you doing? Can you teach me? A 9-year-old. Now, my boys, they were older. They had no interest in money whatsoever. But my 9-year-old girl says, Daddy, can you teach me? All right. So here's the challenge. It had to be simple. She's only 9. Safe, because she's only 9. Predictable, consistent, and no way for her to lose. So the 5 rules: never buy something that's not on the list. That was for my daughter. Never buy something not on the list. Now, when I say not on the list, all right, this is my list. Every single one of these green dots represents a company that is consistently profitable for more than 25 years. Every single one of these. Now, this is just for the month of June. The month of July has another bunch. The month of August has another bunch. There's a whole bunch of them that have 25 years or more of increased profitability, because that just makes sense. your residence. Woohoo! Hakuna Matata. What's happening? So take a look at the different companies here. You got Pepsi, Kimberly-Clark, ADP, T. Rowe Price, Albemarle, Coca-Cola, Medtronic, General Dynamics, Cardinal Health, a bunch of other ones. Consistently profitable. Why would you invest any other way? So no, I would not sell for less. I would just keep on rolling the option forward and bring in some kind of income. Even if it's below 1%, I will still take it. The Real Turner, 1% all day, I will take it. Okay, it's boring as hell. Where can we get a copy of the recording? Kelly, good evening, Miss Kelly. Yay. Kelly, YouTube. Okay, YouTube, that 10-minute trade. You can go up to the bio, the top left corner, and it says Dividend Stock Talk. Click on there and you will see the 10-minute trade. Send me an email. DM me. I will have a conversation with anyone. Now, anywhere between 10 to 30,000 people. I'm up to 30,000 people a night come through because I got 10 different channels that I'm live broadcasting on. 10. So I got a whole bunch of conversations going on at the same time. If you want to have a conversation, DM me with your phone number and I will give you a call. Okay? Understandable. Is this Michael Burry? No. Laurie, you're getting so popular, you might need help. Actually, Laurie, I do need help. But I need, I'm actually going to be hiring someone. I get to that point where I just can't handle all the emails and I can't handle all the spreadsheets. So it's that time. Because everyone gets at that point. You know, what is my time worth? Well, my time to me is worth more than sitting in front of the computer doing spreadsheets. So I just rather just hire someone. Okay, and I'm going to need someone to do the AV with me. So that way we can have better video. And then maybe if that person's smart enough, we can zoom in and take a better look at the numbers so you guys can see this. Do you invest or trade? What's your strategy? Sean, how are you doing today? Would you invest in SCHD? Esteban, hell no. I don't like SCHD. Because for me, SCHD are for those people that don't want to do it themselves. Don't get me wrong, SCHD, it's run by a good company, okay? They have historical performance behind them, but I don't like the numbers with SCHD. They're not consistently profitable. I don't like them. It's basically for people who don't want to do it themselves, because you got two choices. When you retire, and you all will get there eventually, okay? You got two choices. Do it yourself or give your money to someone else, let them do it for you. But I'm pretty sure nobody has as much interest in your money than you do. So, Sean, do I invest or trade? What's my strategy? The strategy is called Dividend Capturing 2.0. I created it for my 9-year-old daughter. Okay, it's basically cash flow investing. See, I'm investing with companies that I would like to hold long term. But if they hit my target, I'm out. That's it. All right. All right. What other questions do we have? Questions. What is General Electric symbol? GE. Escapology. If you are making so much money on stocks, why are you wasting time on TikTok? I just love it when people tell me how I should live my life. Well, escapology, here you go. You ready? At some point in your life, and we all get there, all right? At some point in your life, you feel compelled to share what you have learned over the years. So yeah, I have a video channel and I share what I've learned, okay? So I think it is a crime to take everything that you have learned to your grave. Pass it along. And also, escapology, I'm creating a video diary for my children and my grandchildren, and hopefully my great-grandchildren. Stock market's been around for 400 years. Dividend capturing is one of the oldest strategies there is. It's 400 years old. 400 years old. The strategy that I use. Well, if it's been working for the past 400 years, why the hell not pass that information along? Okay, this is not the only video channel I have because I have other information up here that I want to share. Okay? Now, my children are at that point in their lives where they're finding what I'm doing rather interesting. Because they always say, what does your dad do? Well, I don't know, because they didn't know. Okay, so I admit, thank you. I'm starting to invest in QYLD. What are your thoughts on QYLD? Now, Anthony, if it works for you, perfect. Do it. I don't like, me personally, I don't like it. I don't like JEPQ. I don't like Devo. There's a lot of things I don't like because they just don't fit what I'm looking for. Esteban, I am rolling over my 401k to a rollover IRA. I want to move some money into an ETF like SCHD. Nothing wrong with that. I do want to take control. Well, why would you put it into SCHD if you want to take control? See, I give very minimal advice. Okay, one advice, do I like eBay? Yeah, I give very minimal advice. Number one, never use margin money until you understand the risks. Number two, never invest your money until you perfect the trading strategy with paper trading. Okay, Chase, I don't like energy transfer. No, I used to trade energy transfer years ago, but ever since they've done whatever they did, the premiums are absolutely horrible, so I don't do that. Which ticker symbol for GE? Did you seriously just ask that question, Fonzarelli? Think about it. What ticker symbol for GE? I'm going to give you a minute, see if you get it. The ticker symbol for GE, General Electric, GE. What is the ticker symbol for General? I'm going to see if you get it. Move some to ETF, play it safe, and then do it alone. If it works for you, great. Absolutely nothing wrong with that. I think everybody should learn about their own money, learn what to do with it. Mr. Nice Guy, any advice on not getting your stocks called to avoid a tax bill? Okay, number one, Mr. Nice Guy, if you're worried about taxes, what a tragedy. Think about it. You're making a lot of money, so you have to worry about taxes. Yeah, talk to a tax strategist or a tax planner. Set your accounts up to a point where you legally pay the least amount of taxes legally. Okay? All right, I think I'm caught up with the questions. Oh, Urban, back again. You're a disturbed young child there, brother. Any advice? Okay, we already did that one. Thoughts on Pfizer and KHC. I like both of those. Uber, Jack, think about it, Jack. Has Uber been around for at least 20 years? Jack, yes, no. Uber, 20 years? Probably not. HIMS hasn't been around for 20 years. I have no idea what the financial thing means. Actually, you do. You just want to play dumb because we all know something. If you are over the age of 10, you have some idea of money and you have some idea of a good company. Because if you're in a car and mom and dad are driving, you're driving down the road, you see Exxon, you see Shell, you see Arby's, McDonald's, Walmart. These things you see as you're driving along. So wouldn't it make sense if you see certain things everywhere? Well, something has to be working for that company. Think about it. You know a lot more than you think you do. Hey, Mark, spam submission. Cool bean. Thank you. Okay, Rambler, Nvidia. Oh, you know what? Let's take a look. I haven't done this in a while, so I'm going to do this for Rambler. Rambler wants to take a look at Nvidia. All right, Rambler. All right, Nvidia. Gonna need the glasses for this one. Let's avoid this and go right to Yahoo Finance. Okay. NVDA. I do this once a week, once every couple of weeks. So we're going to take a look at Nvidia. Mr. Rambler is curious about Nvidia. Now, when I say, for me personally, I only want to invest in companies that are consistently profitable and share their profits, which means hypothetically, their profits should increase year after year after year after year. Correct? Wonderful. Well, let's take a look at Nvidia. Okay? So, Nvidia, $144.17. Yay! Well, we're going to look at the dividends for Nvidia for the last 2 decades, 20 years. Well, let's check it out. All the way back to 2005. Wait a second. It only goes to 2012. Are you kidding me? Yeah. Okay, Nvidia's very first dividend was 2012. Well, that's not 20 years. That's not even close. But let's take a look at the numbers just for the fun of it. All right? So you're paying $144 per share for this. So let's take a look. 0.1. That's not even 1 penny. That's 0.1. All right, 0.18. 0.18. 0.18. Wait a minute, that's not going up. That's the exact same. Okay, 0.2. 0.2. 0.2. 0.2. 0.2. 0.2, 0.2, 0.2, 0.2, 0.2, 0.2, 0.2, 0.3. It took, 4 years to go up 1 penny? No, not even 1 penny. 1/10 of a penny. All right, well, let's keep on going. 0.3, 0.3, 0.3, 0.3, 0.3, 0.4, 0.4, 0.4, 0.4, 0.4, 0.4. Doesn't increase at all. Now, 2024, it's 1 penny. You're paying $144 for a 1 penny dividend. Think about that. Let that soak in for a second. $144 for a 1 penny dividend. Definitely not an income stock. Definitely not. All right, so let's take a look at the summary because those numbers are atrocious. Now, the summary, let's take a look. Let's find out the numbers here. Okay, Nvidia Corporation, $144.17. Okay, previous close, days range, 52-week, 86 to 150. That's almost a 50% spread between 153, the high, and 86 is the low. Look at the volume, 150 million. So here's a number you're going to like. Right here, your dividend yield. Now, do you understand what a dividend yield is? That's how much money you get after you invest. Okay, for 1 year, you're getting 0.03. That's not even, that's 3/100ths of a percent. 3/100ths of a percent. Think about it this way. If you invest $100, 1% is $1. $100, 1% is $1. Well, this percentage, 0.03, if you invest $100, you're getting 3 cents. You're getting 3 cents for every $100 you put into Nvidia. And it's not consistently profitable. The profits aren't increasing systematically every single year. So I'm curious, why do you think that is a good investment? I'm looking for cash flow. This definitely ain't it. Okay, Jack, Uber hasn't been around. Nvidia is absolutely horrible in my humble opinion for what I'm doing. Now, if you want to buy a stock and have it shoot to the moon, yeah, that might be your choice. But I won't even look at it. I won't even give it the time of day because it just doesn't fit what I'm doing. Okay, 305 La Playa. Okay, dude, we've done this before. This is not the first time you've been here. JEPQ, hell no. DIVO, double hell no. Okay, time to delete. So there's no sideways with stocks. Do you have a stock in particular that you think goes sideways? Think about it. Now, they do have something called channeling, where it stays between a certain top and a certain bottom. Uh-oh. Hakuna Matata wants to come on. What do you have to say here, brother? Uh-oh. Here we go. Okay, I just sent you the invite. You're ready to go when you are. Thoughts on Iran Israel ceasefire deal? Don't get me involved in politics. You won't like what I have to say. I'm wondering, what experience do you have? Oh, well. What kind of experience is it that you feel that I need in order to be able to read numbers on a screen? I mean, I did go to elementary school. I do know my alphabet, and I do know the words and the numbers, because that's all I'm doing. I'm just reading words off of a screen. I don't give advice. I don't tell people what to do. I'm just reading numbers. So what experience is it that you think that I need? I'm curious. Hakuna, how are things over there in... Is it Switzerland? And letting me having you up in your life. It was a long time ago. Okay, wait a second. Hold on a second. I'm going to ask you a question, and if you answer wrong, I'm going to hang up on you. I'm getting nervous now. Okay, that book you were writing. Before you hang up, I have a few questions. Okay, wait a second. What? Hold on. The book you said you were writing that you wanted me to put a little input on. How's that book coming along? It's coming. Uh-oh. I'm just going to find the notebooks. So I'm back here again. Maybe I need to have some complimentary answers. But I also wanted to ask you, is this similar to, and I think you mentioned that, similar to the wheel? Or is it more you have taken away some parts that you feel is really necessary? Okay, now we've had this discussion.